Welcome back, and you're watching Market Fatatfat on ET now. And now we'll continue with all the stocks that are buzzing and in trade. And now on the technicals, we have Dhwani Patel joining in with us. Dhwani, a very good afternoon to you. And let's start with the first stock for today, Indus Towers. What's making it to your list today for this one? Why is it on your list, and what's the target?
Good afternoon. The first thing why Indus Towers is on my list is because what I see on a weekly over here is that price is forming a divergence on the positive side with the RSI. On a daily chart also, if you're taking a look at it, we are also seeing a higher high formation coming in on this particular stock. It's more of a mean reverting trade where we are trading above the 50 period exponential moving average, and we are trying to chase the 200 period exponential moving average on the side over here. The target over here comes as a 175, keeping a stop loss which is a 150, which makes a good risk reward ratio also over here for this particular stock.
All right, earnings galore. Like I mentioned, it's earnings season, fag end of the earnings season, and right now, as you can see on the bottom of the screen, you have M&M that's reported as numbers. The PAT is coming at around 1,550 crore rupees. We'll just get in some more details on the fact that what are the finer details. For now, what we are seeing is they've approved a dividend of 16.25 rupees per share. The PAT is coming lower when you compare it to ET Now estimates. These PATs are from the agencies. If you look at the numbers, the standalone numbers as I have it, 1,549 crore rupees is the PAT number, which is seeing an uptick of about 22.1% on a year-on-year basis. What about the, if you look at the poll, Vinny, how are the polls for M&M?
So in terms of the polls that we're seeing coming in, what the profit is coming in as at 1,647 crores is what the profits for the company stood at in our estimate. So yes, when you look at it in terms of that, it's slight below the expectation in terms of the profits of the company. In terms of the revenue of the company also, revenue has come in at 22,571 crores. That's the number what we're seeing, while versus the poll was only 21,899. So clearly, in terms of revenues, the company has done better, but in terms of the profits, we're seeing a decline there. Margins of the company, 12.4%. We were expecting 12.9%. Slight bit of miss on that margin front over there, Cheryl, is what we're seeing coming in. And maybe that weakness, that margin is due to a weak mix that the company is seeing, plus the increasing prices as well. And let's not forget there's an exceptional loss that has come in of 511 crores over here as well. So yes, that's the number what it is looking like. They've recommended a dividend of around 16.25 rupees as well, Cheryl.
So yes,
as of now the stock is actually become flat and given up those gains that it was seeing.
Given the fact that the PAT is below the estimates, if you look at it, yes, we are expecting 1,600 odd crore rupees. It's come at 1,500 odd crore rupees. So yes, the PAT is definitely a miss coming in. If you look at the EBITDA margin, we expected 12.9% for the EBITDA margin. Is coming at around 12.4%. So tad bit of decline coming in on that particular front. No doubt the revenue is coming a tad bit above the ET Now estimates, 22,000 odd crore rupees for the revenue, but we are expected a revenue of around 21,000 odd crore rupees. Exceptional loss is what they are reporting, 511 crore rupees is the exceptional loss. So this is the finer details coming in for M&M. As of now, we'll wait for the management commentary to understand what exactly impacted the numbers in the quarter gone by. If we look at the stock price, right now is inching in the positive territory, seeing flat moves with a positive bias.
Absolutely. And Cheryl, let's not forget, M&M is one of those other companies also which is more in the rural areas as well. Plus that monsoon factor comes into play for them as well. So that's all these factors come into play. As of now, earnings is something that we're keeping an eye out on.
Also, inflationary pressures are also likely to hit the numbers as well. That's what has happened in your consumer sector as well. The rural sector has been weak, and we're likely to see even the companies that are catering more to the rural sector to see that hit as well. So that's M&M for you. And let's bring on board Abhishek to talk more on the numbers. Abhishek, thank you so much for joining us on ET Now. And what's your first reaction to these M&M numbers? If you look at the margins and the profit, they've come in below the ET Now estimate, exceptional loss of 511 crore rupees.
See, broadly, I think that the numbers were broadly in line with our estimates, although the margin figure is the blip, which I think would be seen more onto the how the EBIT performance would be there in the individual automotive and the tractor business. Although expectations for this quarter from M&M was already slow because it has registered a QQ kind of a decline in the tractor business, and the increase was largely driven by the automotive business. So there were things which we need to see that how the individual business has performed on the EBIT margin side. So that thing we need to see.
Okay, right, Abhishek. That's individual businesses are what we're keeping an eye out on. But when I'm reading just in terms of volumes also, like you were saying, auto is something that did do better. So auto volumes were up by 21.4% on a year-on-year basis. Quarter-on-quarter basis also, that's an improvement. Given all the current scenario in terms of the monsoon delay coming in, other factors in terms of the RM prices, how do you see this, going forward as well? Could this be a concern in terms of volumes for the segments that are there for the company then?
See, the company has been doing much better than that its past in the automotive segment. And the company did well in the tractor segment in last 2 years. So although there is a high base effect and the tractor is a highly profitable business for the company. So the whatever the concern that the street has been building up is largely on the tractor side because of this El Nino and the monsoon side of the thing. But what we believe that the Mahindra and Mahindra has a market leadership kind of a position in the tractor segment, and it has a pan-India presence. So even in the tough time, we believe that it would continue to maintain its leadership, and based on the leadership, that its profitability would be improved if the raw material tailwind would trend in its favor. So broadly, in the coming years, more than the volume, what we believe that it's the volume mix and the EBIT margin trend would drive its performance. Today, company is hosting a call, and then post that we will come out with our details in the company.
Absolutely. Once you hear it from the management, you will exactly know the nitty-gritties and the finer details of the earnings. But in the pecking order for the four-wheeler auto space, where does M&M stack for you, Abhishek?
We are preferring more on the Tata Motors than that of Mahindra and Mahindra in overall pick.
Thank you so much for joining in with us this afternoon. For Abhishek, the numbers were in line with their estimates. Let's keep an eye out on individual businesses. That's what's the word coming in for him on M&M. But we have our auto analyst with us now. And Shrishti, take us through those numbers for M&M. How are they stacking up against the poll of ET now? What are the nitty-gritties in terms of the exceptional losses as well that we're seeing there?
Yes, the margins have disappointed a bit when it comes to M&M numbers, because we were expecting a number close to 13%. The company has posted their margins for both of their divisions at 12.4%. So a bit of a disappointment, but an outperformance onto the profit figure, because if we adjust for the exceptional item, that is for 511 crores on the back of the impairment provisions that the company has taken, and adjusting to that, the profit has actually come in above 2,000 crore rupees, and that's above our expectation of 1,650 odd crores that we were expecting at ET now. When talking about the revenue as well as the EBITDA figure, then on a sequential basis, we have seen a growth of 4.5% onto the top line of the company at 22,571 crores, a bit of an outperformance coming in over there, and even the EBITDA margins has seen to be almost flat on a sequential basis at 2,798 crores. So the first cut says that not a bad set coming in from the M&M, despite the fact that there has been a 60 basis point disappointment versus the estimates. But in terms of the profit figure, that has really surpassed our expectation. But definitely the key to watch out will be the auto EBIT margins, how the performance is over there, and what is the outlook for their farm equipment segments. Any hopes on the volume recovery going ahead is something that we'll be watching out for.
All right, thank you so much for that, Shrishti, for breaking down the M&M numbers for us. But let's talk about the another numbers that have come out just while M&M hit the screen, and that is Info Edge. And if you look at the numbers, first let me take a look at what the stock price is doing of Info Edge, because if you look at the numbers, they are pretty weak, and exactly that's what is reflected in the stock price as well.
It's reported a loss actually this time versus the profit, and that's the reason for that fall.
Exactly,
also
and the loss number is pretty significant if you look at it. 447 crore rupees versus a PAT of around 99 crore rupees on a quarter-on-quarter basis. We see these numbers on a quarter-on-quarter basis. If you look at the revenue, it's coming at around 605 crore rupees, as again 589 crore rupees on a quarter-on-quarter basis. The company has seen a one-time exception loss of about 97 crore crore rupees in the quarter gone by. If you look at the EBITDA, is also down by about 1.6%, coming in at around 185 crore rupees. And EBITDA margin has also seen a contraction on a quarter-on-quarter basis, coming in at around 30.7% versus 32% on a quarter-on-quarter basis. So that is Info Edge numbers for you, flashing on the bottom of the screen. You can see the stock also taking a knock, 2.7%. We will also speak to the management shortly, Vinny.
Absolutely. But let's keep it going with other stocks that are also in focus. Dhwani, the next stock that you've picked out for us is Piramal Pharma. So why have you picked out this one? What is the target price and is it a buy call?
This one goes on my buy list, and it's not for a very short term that I'm talking about. This is something that you can hold on for next 6 to 8 months into your portfolio. And what I'm seeing over here is the stock has bottomed out on a weekly. What we are seeing over here is volumes is something that drives my attention over here. In last session, we have seen great amount of volume increased in this particular stock. The stock has moved above its 50-period exponential moving average. So it's more of like bottom fishing what we are doing over here in Piramal Pharma. You have to buy from the current price level. The stop loss over here anywhere at where the stock can break down the structure is 73. So 73 is an ideal stop loss for this particular one. One can go long on this one for a target of 115 in a very short term. And once 115 surpasses, then I must say that the stock is going to have a next target of 120 also coming on much very short.
All right, so that is Piramal Pharma for you. But Dhwani, Quess Corp, why is this one making to your list? How is the charts looking for this one?
Yes, absolutely. Quess Corp is also one more structure like Piramal Pharma. What I'm seeing over here is it's more of a bottom fishing. These volumes are picking up in this particular one very slowly over here. We are seeing a range breakout also coming in on the short term over here. About 395 is an ideal range breakout trade in this one. So one can go long above 395 in this one, and for a target of 445 that we can play out to. The stop loss over here comes at 375.
Okay, let's move on. And Lisa, the next stock that you picked out for us, that is Sigachi Industries. This one in focus on the back of its numbers as well.
Yes, absolutely, Vinny. Sigachi has reported weak set of numbers, and we can see the stock reacting to that negatively. If you look at the revenue, that was flat on year-on-year basis and stood at 72 crore, while the EBITDA that was down 17% on year-on-year basis, while the net profit that was also down 37% on year-on-year basis. The EBITDA margin that contracted to 16.8% versus 20% last year, and it was down 340 bips. Now, if we look at the companies, the company had passed on the freight, the high freight as well as the raw material cost, but still they couldn't pass the full cost, and that is why the margin came in lower. While the overall revenue for FY23 that was driven primarily by realization. The company also spelled its strategy going forward. They said that they will be diversifying the product mix in pharma and also enhancing the global footprint and expanding their manufacturing capacities. So, despite a good outlook, strong and healthy outlook, the company is, the stock we can see it's down around 4%, and that is because of weak set of numbers.
Okay, keeping an eye out on Sigachi Industries. But let's move on and talk about TTK Prestige. This one is in focus today on the back of a note that is coming from CLSA. Yes, they came out with their numbers just a couple of days back. It was a weak set of numbers. But now, CLSA has come out with a note and saying that they have downgraded the stock to an underperform from a previous outperform rating. They've cut the target price to 720 rupees from previous 900 rupees. Obviously, weak Q4 numbers amid the low demand and high competition is something that they are watching out for, and the main reason for the downgrade coming over there as well. Other than that, competition is also increasing. We're seeing in the rise in the competitive intensity as well. And CLSA is highlighting that the near-term outlook could remain muted. The growth is to resume in the second half of FY24. So that is why they're cutting their FY24, FY25 EPS targets by 16% on a weak Q4 number as well as lower than expected growth. So let's keep an eye out on that one.
All right, that's TTK Prestige for you with a cut in the target coming in from CLSA. The stock is also declining in trade today. Let's just take the note of the flash on the bottom of the screen. Karnataka Bank has a new MD and CEO. The RBI has approved Sri Krishnan Harihara Sarma as the MD and CEO, and you can see the stock actually reacting pretty positively on that development. 5% uptick coming in for Karnataka Bank post this particular development. Right after the news came out that he's been appointed, you saw the stock spike, and right now The stock is trading higher by excess of 5% after approval of a new MD and CEO for Karnataka Bank.
Let's move on and then talk about SBI on the charts. And Dhwani, this PSU bank, what is it making to your list still? How much more is the run-up that we should be expecting from here?
So the reason first what makes to my list is what I'm seeing in Bank Nifty is that Bank Nifty is trading near its highs, and a breakout above 44,100 is a great breakout we'll see in Bank Nifty over here. 44,500 is a short-term target, but above which we will see new all-time highs again. Today that we are seeing that PSU banks are outperforming the private sector banks, SBI definitely has to make it on the list. What I'm seeing particularly in this particular stock is that it's trying to give a breakout above its moving averages. In fact, the up move that we are seeing in today's session is an up move that we are seeing above all the short-term moving averages over here. One can go long into this one for a short-term right now, target of coming up at 615 and a stop loss over here at that comes down at 80.
All right, moving on, let's talk about Page Industries, and this one is getting knocked in today's trading session. At one point in time, we saw a decline in excess of about 15% or so, and if you can see, the stock right now is off those lowest levels. They're now trading lower by about 8.8%. When it fell above 15%, it was the biggest intraday loss for the company since July 2009. It's fallen for a third consecutive session. The company posted a near 60% slump in their Q4 profits, and the profits came in at around 78.3 crore rupees. Revenue from operations saw a decline of about 12.8%. This was mainly due to the weaker top-line growth, leading to under-absorption of the overhead costs and continued marketing investment. That's the word coming in from Morgan Stanley on back of Page Industries numbers. They're saying the revenue growth will likely be weak for the next 2 quarters, with recovery in H2 FY24, and margin recovery should lead the revenue growth, is what Morgan Stanley believes for Page Industries. Even though retail expansion rate has been healthy since past couple of quarters, substantial continuous decline in volumes is concerning, is the word coming in from ICICI Securities. And these are not the only 2 brokerages, Vinny. You've seen a lot of brokerage go ahead and cut their recommendation as well as target price of Page Industries after this dismal quarter.
Absolutely. So weakness, clear weakness is what we saw in the stock price, and main reason was obviously the weak numbers, like you mentioned. But let's move on to the next one on the charts, and LTI Mindtree. Dhwani, this one has seen a stellar move in the last 1 month itself, and I was looking right now, it's 19 or 20% odd percent up in trade. How much more upside? Because, you know, this one is not that bad in terms of coming in from the IT pack.
Yes, absolutely. When we talked last week also, we had talked about the CNX IT index, where I was saying that the index been bottoming out. Infi was one of my pick over there. And in today's move that we are seeing in LTI Mindtree, it's a breakout trade that we are looking up at this particular one. A short-term target for FO come over here at 5100 levels. Once 5100 levels are surpassed, we can see further upside coming in this particular stock at 5235 level. Chartically also, the structure what we are looking over here on weeklies as is giving a range breakout as well. We are trading above 50 period exponential weekly average over here on LTI Mindtree, so one can go long over here and hold it into the portfolio. For traders, 51 is the target, and for investors, it's more of a trailing stop loss strategy that you can use on this particular stock.
All right, moving on, Harsh, let's talk about SAIL. How are the numbers for this one?
Well, Steel Authority under some amount of pressure. We're looking at revenue, which is actually down 5.5% odd. We're also seeing EBITDA, which is taking a bit of a beating, down around 33% on a year-on-year basis. Margins have come up from that 14% mark to the 10% mark. Just above 10% is where the margin number is at, and profit after tax has declined around 53% year-on-year. Of course, lots of pressure on the stock early on in trade, but now we've seen a smart recovery on the stock, as you can see on your screens, just about in the green.
Coming in on sale, but let's move on and talk about a defense name, and Hindustan Aeronautics. Dhwani, on the charts, is it an attractive time to pick this?
it's time to book in profits in particular stock. What I'm seeing over here on charts is that the stock has made a top at 3200 level. We are not moving anywhere above it. So if anyone's holding into the portfolio, it's the right time to book your profits in this particular stock. Over here, what I'm seeing is a downfall that is coming into this one, because on dailies also we are seeing its RSI giving a negative crossover, and the stock is moving downwards to its 50 period exponential moving average. It's more of a mean reverting trade right now that we are seeing on the sell side. The target is coming down is 2880, and a stop loss over here at 3100 is necessary.
All right, this one is on HAL, but let's stick with the defense pack, and Mishra Dhatu is the other counter leader. Why is this one in focus?
Shradhatu, they reported weak set of numbers. While the revenue that was up 6.6% on year-on-year basis, however, the EBITDA that was down 18%, while the net profit that saw a decline of 18% on year-on-year basis. EBITDA margin also saw a sharp contraction to 29% versus 37% last year. Well, the order book position of the company that stood at around 1,331 crore, and they also announced dividend for FY23, which stood at around 3.35 per share, and that entails a 40% payout of the PAT, and that is the highest paid dividend by the company. So, well, that was on Mishra Dhatu. It is down 5% as we speak.
All right, that is Mishra Dhatu for you. And Harsh, coming to you, ITD Cementation and Infra Pack Company. How is this numbers, or is it buzzing on numbers?
Well, yes, absolutely, Cheryl. On the back of numbers itself, and it's good set delivered by the company. What we're seeing is revenue went up 39% year-on-year, coming in at 1631 crore. So solid growth there. We're looking at EBITDA, which is at 147 crore, which is also a 58% uptake on a year-on-year basis. Margins coming in at 9% versus closer to that 7% number same time last year. So clearly, we're seeing a good trend here in terms of the numbers. We're seeing profit after tax up, more than doubling up from that 17 crore mark all the way to 38 crore. So a solid set delivered. In fact, the stock was soaring in trade today. Can see it was up over 5 to 6% in early trade, currently up around 1% or thereabouts.
Okay, let's move on to another name on the charts, and Coal India. Dhwani, an attractive time to pick this?
Yes, absolutely. It's a good time to put money into this one, because we are seeing over here, it's trying to fill the gap that it had made on 15th of November 2022, post which the stock has been trending downwards. It made a bottom near 207 levels, and we've seen some good gains of coming in over from that level till now. The gap that it had made on this particular day, it's trading near that zone, and it's trying to close that gap. The gap closure over here comes at 246 level, but post which we will see certain momentum play coming in this particular stock, which gives a target of 260. On the downside, one can maintain a stop loss over here, which is 238.
Okay, let's take a look at the markets right now. Flashing on bottom of the screen, 150 points off the day's lowest point, and we are comfortably marching towards the 18,500 mark. Remember, the Nifty is at the highest level in the year 2023, and yes, near the day's highest point. So yeah, looking very bright, sunny day for us, for the markets, at least apart from it being sunny out there in Mumbai also, Vinny.
Absolutely, but yes, a very good move coming in the markets. You know, that up move has just continued through the day. So like you were mentioning at the beginning of the show, a steady, a good beginning to the series is something that is very exciting, at least coming in for today.
Hopefully, fingers crossed, 18,500 should be here today itself. You have one more hour left for the trading session.
Absolutely, but on that note, you know, let's also go across to my colleague Anurag Shah. Now, Bima Sugam, the one-stop solution for all the insurance-related issues, will be launched by August. Now, ETR has learned from its sources that IRDAI is meeting with the companies and other shareholders on May 29th, and that will be on deciding on the health exchanges. Anurag, please take us through these details. What is happening in this space now?
UPI-like platform for insurance sector, that is Bima Sugam, is likely to be reality from August this year. Insurance industry has assured insurance regulator IRDA to launch Bima Sugam platform from 1st August 2023, and preparations are going on full swing to make Bima Sugam reality from 1st August 2023. Apart from that, one major development has also happened in insurance industry is related to the health exchange. Health exchange has been developed by National Health Authority, and on upcoming 29th of May, that is next Monday, National Health Authority is meeting officers of general insurance industry, because now for this health exchange, general insurance industry also been asked to come on board, and IRD is also will be meeting with the officials of National Health Authority to decide the timeline for the launch of health exchange. So this health exchange would be a platform, a digital platform for health claims, and it will help in processing of health insurance claims, and for insurance company it will help in detection of fraud claims. So two major development related to insurance industry, that is Bima Sugam, which is likely to be launched from 1st August 2023, and the next is health exchange, which will prevent fraudulent claims in medical fraternity, which will prevent fraud claims related to the insurance companies. And on 29th of May, insurance companies are meeting National Health Authority to decide the launch of newly proposed health exchange.
Thank you so much for that, Anurag. And with that, we are totally out of time on this week's edition of Market Fatafat. Goodbye for Vinny, myself, our producer Snehi, and the entire team of Market Fatafat. Thank you so much for watching. See you next week.